What is up, everybody? Logan here again with Halcyon, and we're going to go over this Long Condor trade that we took. You guys really liked the last Long Condor video we did, and that was a very successful trade. So we're back again with SBUX on this one. I have been MIA for a little bit from YouTube. I actually had COVID for a couple days, so I'm quarantined right now, and we've still been having a lot of fun with the trades, but it does suck when you do get it, but it happens. So we took this trade in the Discord. What was it, yesterday? I'm pretty sure. And so far, it's working out really well with SBUX gapping up 1.5% overnight. So that's going to be everything for me. If you guys want to join the Discord, the link's below. But also make sure to leave a like and a comment on this video. Halcyon, how are you doing today, my man?
I'm feeling good, feeling healthy.
Better than me.
Non-corona driven. So yeah, man, you sound a little stuffy.
I
It's no
know
fun.
that's honestly more allergies than anything because of the people cutting the grass around us right now. But
Mm.
because I haven't really dealt with any sort of that as a symptom with any sort of like congestion at all. But yeah, it was brutal. The dizziness was definitely the worst, but everything else
I
was,
can imagine that does not sound enjoyable at all.
it was not.
But what does sound fun is making money on long condors. So
Absolutely.
we talk about why we took this and what was the setup we were looking at. So a couple thoughts here. So we did a long condor. If you don't know what a long condor is, you probably have heard of an iron condor, which is for most people. That's if you're here talking about condors, that's probably more commonly used. Where a long condor is a debit trade and an iron condor is a credit trade. And the shape looks sort of similar, which we'll get to that on an analyze tab in a section. But ultimately, you're just basically doing some debit spreads that are smashed together and they make this kind of condor shape. It's a pretty risk defined trade, which is one of the main reasons why we put this on. I don't have any crystal ball that the market's going to fall or anything like that. But after we keep approaching all-time highs over and over again, it sure feels like we're ready to have one of those nice little, couple percent down in a row days. And so we've thought about, we could put a put credit spread on here, but of course, the credit is nil on SBUX. It was partly because it's a smaller stock and partly because it's just the volatility has been nothing on it for a while. So you don't get a whole lot of credit for that. So we said, well, what else can we do? And also, I want to do a little more risk to find. Let's look at a condor because it gives a really interesting risk to reward. So you're risking about 1 to make somewhere around 3 to 4. And that's anytime I can do that and I have a good setup, then yum, yum, yum. Let's eat. So this is what I was looking at on this particular trade. And again, you guys know my stuff. There's no secret here. I'm using the standard deviation channels. For me personally, and the way my temperament with trading, this gives me a lot of clarity and a lot of confidence in the trades that I'm doing. For the long condors, because we did this one a couple of weeks out, I think this is one is 3 weeks out. I don't really care so much about what the very short time frames are doing. So in this case, it's the 10-day, 10 minutes, which is what I use. Like I said, I try to, on the 10-day, 10 minute, I try to buy stuff down in this range and then get rid of it when it gets up here. However, because I'm going longer term, this will tend to oscillate back and forth in here a few times. And then you have the 30 days, 30 minutes, and then this is the 90-day 1 hour. And this is what we were driving off of our setup here. So we look at the 90-day 1 hour. Actually, I'm going to zoom this one in. Looks a little cleaner. So what we had was today is Tuesday? Yeah, today's Tuesday. So Monday right here, we were seeing that on Friday, we had pushed back above the RSI, which means that there is some momentum coming back in. And then we had this nice little, on the squeeze, we had this nice little kind of negative momentum going into, less negative, going and actually flipping into positive. So all of these things in conjunction said, SBUX sure looks like it wants to go, especially if it can get over this 89 period moving average, which is what I use on the hourly. If it can get over that, I think we're going to get running, And so we looked at, well, what's the risk defined trade we can put on? Then we looked at our 195, which is just splitting the day in half. Okay, so this splits the day in half. Let me zoom out a little bit here. So each bar represents half of a day of trading. Again, same deal, right? Same standard deviation lines. The further you go out in time, the more important these standard deviation lines are. So like 10 minutes, yeah, that's important, but looking at, 195s or 4 hours or dailies or weeklies, those have a lot more integrity and a lot more support and resistance to them because of the nature of the way the longer the time frames are. There's way more volume in those ranges. So we saw the same thing happening here, right? And anytime you can find a position that has multiple time frames that are lining up basically the exact same way, so whether that's your squeezes are showing up here, your RSI going back above 50, which for me, when I go above 50, that's buys, going below 50, that's sells. And so I just customed this RSI to show green above 50 and red below 50. I know you guys can use it for if it goes above 70 and comes back down, buy it at 50, blah, blah, blah. I get that. But I like to use it as just a visual cue for there's strength coming into this or there's weakness in it. We had the squeeze, same thing. This has been for quite some time. What is this? Since the beginning of August that we've had this kind of downward trend going with SBUX here. And we finally started finding some support at, not a surprise, what we call our 20-yard line, which is where most trending up stocks are going to hang around this area. They're going to pause and find their footing and then work their way off of here. And what most stocks do is they go from one end to the other end and keep doing this over and over again, right? And so when we know trending up positions do that, we want to be in a position to accumulate or find long opportunities when they get down to these ranges, right? That's always our, as we're doing our probabilities over and over again, that's what we're looking for. On top of that, if we can get, technical indicators to show that, hey, we're at momentum is going this way, and this is a squeeze that's showing up here. I like that. Give that a bonus. We're crossing the RSI for the first time in, since around that early August timeframe, crossing RSI back up. That looks awesome. All right. So how do we want to play this thing? The spreads are kind of not going to be an option here because they don't give you anything. And so I'm going to look at something else. And so we looked at maybe do a call debit spread. Maybe we do a, some kind of butterfly. And when we ran through some of the scenarios, what we found was that the Condor was giving us the best risk to reward for that moment at that time. We could pay a lot less, only 44 cents for the Condor. And then I had a pretty good window to work with and a pretty good theta curve that we're working with. So we'll go look at that in just a second here. I'm going to look at the other two time frames, and then you'll see kind of how this picture keeps taking shape, and we'll look at all of them at the same time. Now, again, here's the 4-hour window, right? This is the 365 4-hour, so a 1 year 4-hour. Again, same kind of pattern showing up here, right? RSI crossing over 50. We're seeing a squeeze building. Momentum's going negative into positive. All those things are telling me that buyers are coming back into this. I bet you anything, if I had volume on here, we'd be seeing more volume coming in too. And then finally on the daily, right, which is probably the trump of all of these things, that it's going to be more important than anything else. Our daily, again, on an uptrending position, notice how this we call the 50-yard line is most stocks who are in very heavy trends, they don't break below this 50-yard line. This is the mean. This is what it should be the normal trading range. So when you get back to it, you look at accumulating here, right? So you get back to it and you look for another run back up into this yellow ranges. Now, all of these in conjunction, same thing, right? We've got our squeeze going from negative to losing that negativity, moving into trying to go positive here. It's not quite there. We have the ready, aim, fire going, hey, get long, 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 long here. Plus RSI is confirming going over 50 for the first time since this is early in August. Okay. And so for all of those things combined, we're getting back on top of the moving averages. All that was a really good setup for us to say, all right, let's go long. And how do we take advantage of this? And then we can look at it all in concert now. And these are just screaming to me, short of the 10-minute, 10 daily, it's screaming, get long in this thing. So yesterday, I'm not sure exactly what time we alerted this thing out, but sometime around the, I don't know, mid-morning timeframe, we put that on and we got that for 44 cents. So if we go to the Analyze tab, this is what this trade looked like. Now, if you were to, we'll look at just two of the legs so you can see how the shape is created here. Okay, so if you look at this blue line, this is what our max profit will be if all holds true and we close in 17 days, somewhere in between the 121 to 123-ish range. Now, we aren't planning on that being the case. I'm not planning on trying to land this target perfectly here. What I want to do is just have it kind of keep working its way up here. And you can see this purple line, which is going to be our theta, pushing profit in as we keep moving up in this direction. We're going to see our P&L keep jumping up. And so when you're trying to grow smaller accounts and you're trying to do things that are pretty risk controlled, this is one of the more advantageous ways to go about doing this, because you know exactly what the worst case scenario is here, right? We know that we can lose. In this case, we did 10 contracts. We can lose $440. Right? That's what we're going to lose if we're wrong in this thing, just dead wrong. It just goes plummeting this way.
Mhm.
Now let's just take the same scenario and say we did a put credit spread on this, and say we put it on, somewhere around 113 or 112, whatever it is. We got our 5 cents or 10 cents, whatever that'd be paying, which would be paying nothing on Starbucks. And then it rips down right below you. Well, that loss is going to be significantly more than $400. I don't know exactly what it would be without looking at the actual numbers on it, but it's not going to be pretty. And you're going to be hating put credit spreads at that point, and asking, why did I do a little more risk defined so I can rinse, repeat, go on to the next trade. However, again, we saw this, said, yep, I kind of like all the scenarios here. It sort of looks like a butterfly, kind of acts like a butterfly. It's a pretty theta, almost theta neutral trade. It's negative $5 a day, but not too bad. And so as we look at this thing and we see it just keep grinding up, we're going to keep making profit on it. I think we're already up almost 70%
Yep.
on this since we put it on. And then just real quick to see how you get the shape of this, because what is a long condor? You're buying the 118, selling the 121. So what if you were to think in yourself, okay, what kind of strategy is that? On its own, that's a call debit spread, right? That's just a 118, 121 call debit spread. And then we do the opposite, we're selling a 123, 126. Essentially, you're selling a credit spread then, essentially. So as a shape together, they make this kind of funny condor looking shape. So if we were to take these off and then actually look at the legs themselves, I think I bought this in the fake count too. Well, this is going to be similar, but not quite the same thing. Mm-hmm. So here's what it looks like. We just did one side, right? And this is a basic call debit spread. Here's your floor. Here's it moves up to here. Here's max profit. And that's what it looks like together. Then on the other side of this thing, to bring the cost out of it, it looks like this, right? So it's basically called credit spread, right? Now, when you combine them together, you sandwich those two patterns, and that's how you get this, okay? So again, that's why it's risk defined. So for example, on a call credit spread, you can get your teeth kicked in if it blows through this thing, but because you have a call debit spread, it's going to define what each end of the risk looks like. And you get to make money as you're going into this thing. Yeah. So there you go. That's the reason we took this. Now we're also looking at a few other plays that have a very, very similar setup as this. And we're looking at a couple different ways to take advantage of that. And we'll probably call those out later this afternoon if we're going to do them. But that's the basic gist on the long condor, and kind of doing some defined controlled risk with the context of the market feels super extended here. And I would just love to have maybe a 1% down day to reset things again. Kind of like what we had happen maybe 2 weeks ago or whenever that was roughly. That gave everything a reset so we could have one more push to the upside. And they just look to rinse, repeat, reload. Be smart with your risk you're taking. Don't put on contracts your account can't handle. I mean, that's always the dumbest thing you can do, is put stuff on that your account isn't appropriately sized for. So, questions you got, Logan, on this?
No questions specifically for me. I just wanted to say I also look forward to those down days, because that's when I'm able to take advantage of the VIX jumping, getting a little bit more premium, and then you just kind of get to see the ballpark that we're trading in, and then take a swing at it. As long as you stay properly sized, like those are where I see my best gains, is when I take a swing at that, when the volatility starts to rise and we get back on track. So no question specifically for me. I love the trade. I think it's my only up trade today because everything else is flat. Yeah.
You're welcome.
Yeah, thank you for that. But that's going to be everything for us, guys. If you guys have yet to leave a like on the video, do it now. And we're going to whip up some more videos for you guys throughout the week as well. So I'm glad to be back consistently uploading to YouTube. I would have been back completely last week, but literally got hit with COVID. So it just sucks. But the trades have still been doing good. So
yeah,
that's going to be
you.
everything for us, guys. Make sure to leave a like, and we will see you guys in the next one.